JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 23rd of October 2020. So welcome everyone. Welcome to this Friday's morning session where we're going to have a very quick look at the markets, view the charts, the usual stuff, guys. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the chart, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So feel free to visit us here on jfdbank.com, and I believe you can find some useful information here if you click on the research tab right there. So jumping into the charts. Now the first one I want to pick up here is on the Shanghai Composite. Again, this is just a quick update because not much is happening here, as if you remember in my yesterday's video, also I mentioned that this could be seen right now as a bit of a prolonged bullish flag here, because again it had a nice it has this nice pole here to the upside on the 12th, which formed on the 12th of this October, and then since then, kind of after traveling then from here, traveling lower, it took it about what 8-9 days to only get to the almost to the low of that candle of that pole. So in a way, I mean, this could be seen as a nice bullish indication. However, let's be on the safe side, guys, because we don't want to get caught out here by anything. So that's why if you want to look at some higher levels, then wait for at least a break above the 3,361 territory first, and then we could consider some higher levels, because again, all this area right here could be a bit of a neutral one. It could be moving, the index could continue moving sideways, but if it drops below the 3,280 territory right here, and by dropping I mean if it's gonna close below this area, then that's when I'll consider a bit of a further maybe correction to the downside, because don't forget, we're still trading above this upside support line taken from the low of the 19th of March. So be very careful. This index still has around 50 minutes left of trading, so let's see where this index is going to close today. Hong Kong's Hang Seng Index, now from the technical side, it's quite interesting, because as you can remember previously, I talked about this downside line taken from the high of the 7th of July, and also I mentioned this short-term tentative upside support line taken from the low of the 29th of September, and so far both of these lines are actually kind of doing their jobs in a way. So that's why I'm staying neutral for now. Previously I talked about a bit of a correction to the upside, which happened. I mean, that's great, wonderful, I'll take that, but now, given that we are at a very tricky spot, a very interesting spot as well at the same time, I would prefer to at least wait for a break through one of these lines here. Now just to kind of strengthen the idea of let's say a potential up move here, in addition to that, I would like to see a nice good daily close above the 200-day EMA as well here, so just to be a little bit more on the safe side. Now some of you might see this as a potential inverse head and shoulders pattern right here. Let me just quickly mark that on the chart. So basically with the neckline somewhere around here, yes, we could consider that, and it seems to be like it seems to be the case, but given that we do, if it wouldn't be for these two lines and for this downside line, of course, then yes, we could start already looking at some higher levels straight away from here, from somewhere from around the 24,827 territory. Yes, but again, we do have this downside line as well, so if it provides resistance, then yep, another slide here could be possible, and the whole head and shoulders pattern would be kind of thrown away, let's put it this way. But that's what I'm saying. So if we get a break of this downside line and then maybe a nice daily close above this 200-day EMA, now this is where, yep, it could open the door towards higher levels, but at the moment it's a little bit on the tricky side. German index, so German DAX, here the situation is a little bit difficult and annoying, and to be honest, everything's kind of what I was talking about yesterday. So what I was saying that in order to consider, or just let me rephrase that. Initially, we had a break of this lower side of the rising channel. That's wonderful, great news. The index continued to drift lower, and what I was saying then keep your eyes on the 200-day EMA and this 12,341 territory right here, which could provide a bit of support because it did the same thing here at the end of September. It did the same thing again, pushed the price back above, or should I say, the bulls pushed the price back up here, and kind of they managed to climb fractionally above this lower side of the rising channel. Now, if we look at the cash index right now, we can see that the price, it's currently sitting around 12,540 zone. So basically, it just bang on where it closed yesterday. So it's going to be quite an interesting one. And to be honest, at this point, it's very tricky because in a way, yeah, as always, it could go either way. But that's why I had this scenario, this level here, which I mentioned yesterday, the 12,728 zone, just to be a little bit more on the safe side. A nice good push above it may open the door towards slightly higher levels, but even then we'll be very careful because we do have some tentative downside lines here. So that's why, like I said, I'll remain a bit cautious here with the upside. But if it does push above this 12,728 zone, yes, I'll aim for some higher levels, and then I'll take it from there. In terms of the downside, I would prefer to see a drop below the 12,341 zone first before considering lower areas. So now then, gold, jumping into gold, and here the index is, or the commodity is still stuck below this key barrier, this 1933 barrier, but above this short-term upside support line taken from the low of the 28th of September. Now, in order to aim for some higher levels, again, the same idea remains that I've mentioned previously. I need to see a nice good pop above this 1933 territory. Ideally, also a daily close could do the trick here, could bring a bit more confidence here for the buyers. But until I see that, I'm really going to be very careful here. Although, or should I say, despite the fact that the precious metal is still balancing above this upside line, because don't get me wrong, it's quite easy to break that very quickly. So, but however, if it breaks this upside line, still, as I mentioned to you guys previously, I would prefer to see a drop below the 1877 territory, for at least below that first, in order to maybe start examining some lower areas. Jumping into silver very quickly, here the little problem persists that yes, this upside line previously was a nice line to keep an eye on, but now, well, I mean, it's a bit losing its power, so it's getting broken right now. So I'll keep that for now. It's a similar story as with gold. Basically, in order to aim for some higher levels, we need to see a pop above this 25.24 level, but in order to consider the downside, a break of this upside line wouldn't be enough. I would also need to see a drop somewhere below the 24 territory right here. and then yes, lower levels could be met. But at the moment, it's a bit of a tricky one. So let's not rush into anything yet, guys. Let's keep an eye on it, and let's keep an eye on these two levels. So let's see which one's going to get broken first. WTI Oil, and this one continues to flirt with this 41.46 level. I've mentioned this one from the start of this week, and actually last week as well. I mentioned that one, saying that in order to aim for some higher levels, ideally a nice daily close here above this territory would be nice, because as you can see, we keep getting these false breakouts, and then kind of the commodity is reversing back down. So although yes, we're still trading below this hurdle, below this barrier, we are on the positive note. We are still balancing above the 21-day EMA, shown as the yellow line. Of course, let's keep an eye on today's trading. Let's see how everything is going to end up being today. But if we do get, or I should say, if we will get any surprises or not. But at the moment, as long as it stays below this area, below this 41.46 territory, I'm going to remain a little bit more on the neutral side. And with the downside, now previously I talked about this 39.07 level marked by the low of the 12th of October. Now I will shift this a little bit, and I will keep an eye on this week's current low near the 39.74 territory. Now a nice good drop below this may also also push the price below the 100-day EMA here, shown as the green line. So that's why something like this here could be possible. Now this arrow now can be drawn this way, because we do have a decent amount of area here until we could reach this short-term tentative upside support line. But again, for now, I need to see a clear breakthrough one of these levels first before considering kind of the next directional move. Quick update on Ripple. If Bitcoin and Ethereum, which I've mentioned this week, if you remember, have already popped above their key resistances, this one seems that it's lagging behind, but it's on the same track. I mean, it's also trying now to overcome its key resistance near the 0.26 territory right here. Let's see if it can do that, because at the moment, like I said, if the momentum and the upside momentum on Bitcoin and Ethereum will start kind of slowing down, I would say, then maybe actually we could be seeing here a hold up for Ripple here. We could be seeing it getting held by that 0.26 territory and basically failing to overcome it. So if everybody is now expecting that it's going to do the same thing as Bitcoin and Ethereum did this week, well, I mean, maybe this could come as a surprise and Ethereum might reverse back down. But again, let's keep that in the back of our heads for now. From the technical side, it is knocking on the door of this 0.26 territory. If we get a nice pop above it and we get a nice daily close above it, then yes, I'll start looking at some higher levels. For now, I'm just going to remain a bit more, let's say, cautiously bullish, I would even say. Now, AUD USD. So, oh, by the way, guys, today, just in terms of the economic calendar, keep your eyes on some of the data that's coming out later on today. So we do have some manufacturing PMI figures from the EU, of course, from separate states, UK as well. Service, all the numbers, of course, all the PMI numbers are preliminary, but nevertheless, it will be quite interesting to see how everything's going to play out. US is also producing its manufacturing PMI figures and services PMI figures for the month of October. Those are preliminary. So again, like I said, let's see how that's going to play out. But let's say, for example, the Australian numbers came out today. Well, there were no expectations, but as we can see that the manufacturing PMI, the preliminary manufacturing PMI came out on the lower side here, but the services have picked up a little bit here and jumped from 50.8 to 53.8. So quite a decent move here. However, you can see that looking at this pair, Australian dollar against the US dollar, it's a little bit undecided right now. Although we had this nice pop here on Wednesday, it moved higher. it still found resistance near this 21-day EMA, and then yes, kind of it continues to struggle to overcome it. Now, don't get me wrong, even if it overcomes it, we still have this downside line taken from the high of the 1st of September, so which could come into play as well. But yeah, for now, let's see how all this is going to play out. But at the moment, guys, if you want to look at some lower levels, well, I mean, we just adjust a few of the levels here. So if you want to look at some lower levels, at least wait for a drop maybe below yesterday's low, near the 0.7085. But even then, we do have that 100-day EMA, which, as you can see, kind of acts somewhat as a good area of support. We keep getting these kind of drops below it, but then the next day it reverses sharply back above it. So this is the same thing happened here in the end of September. Now we had the same thing here at the end of October, where this 100-day EMA got tested, it broke below it, but then quite quickly, as you can see, the rate reversed and pushed higher. So in a way, like I said, I'm going to keep an eye on this idea where if the pair travels above the 21-day EMA, then we could maybe see a further push north, but a hold up near this downside line, or should I say, if this downside line holds, then yep, another round of selling here could be possible. Or if it decides not to travel towards this downside line and drops below yesterday's low near the 0.7085, then yes, I'll consider a move back down again here. So something like this here could be possible. So jumping into USDJPY, here the pair is a little bit also tricky. Now on Wednesday, the pair drifted lower to the downside here heavily, and it found support. Well, actually didn't really quite reach this 104.19 level that I talked about previously. Instead, maybe some of you are probably drawing something like this here, kind of showing this upside support line taken from the low of the 31st of July. Now this upside line is a bit, maybe I would say, maybe it is a little bit like here on the upside, or even a little bit flattish here, but again, it's at the moment I would say it's very difficult here with USDJPY. I'm trying to find a good indication of where it's gonna go, but again, at the moment it's just, we need to kind of take it day by day, I would say, and just keep an eye on these short-term levels. And so at the moment, probably given that it found support near this short-term upside line here, taken from the low of the 31st of July, to be honest, I mean, looking at this picture, if you want to look at some downside, wait for at least for a break of this upside line and then kind of consider the downside, because here at the moment it's like I said, it's a little bit tricky. With the upside, it's also tricky, but what we could do here is maybe wait for a push back above the 105.08 territory, somewhere around here, in order to maybe consider the upside. Or you could start looking already at this level, the 104.95, just if you prefer this. And so this basically marks the low of the 2nd of October and also marks the yesterday's high and today's high so far as well. So if we get a nice push above this 104.95 territory, then yes, higher levels could be met. I can see in the chat room here, Stefan is asking what's your favorite up or down in terms of, could you specify that please? I mean, which instrument are you referring to? So yeah, that would be really helpful, and I can maybe get back if I passed that already, so I'll get back on this one. But yeah, guys, so for now, that's, like I said, that's the unclear situation with USDJPY. Hopefully we can get a better, more clear indication of what it wants to do. So yeah, let's see how all this is going to play out. Now, jumping into US dollar against the Russian ruble, and basically this one's quite interesting. I do like to look at these. Well, some might see it as an exotic pair, but still these pairs tend to be very technical. And looking at this picture right now, you can see if we draw this upside line. Now, if we connect the low here, the low of the 23rd of June, and the low here of the 22nd of July, then we can see that the pair is now balancing below this upside line, which means that there could be a possibility for this one to drift lower. However, at the moment it's very unclear. That's the reason why I previously drawn this level, this 75.99, or in a way, let's round it up towards this 76 territory, roughly around here. That's the level I need to see in order to get comfortable with lower areas. That's the level I need to see a break off in order to get some comfortable, more comfort in examining the downside, if I can say it this way. The only problem here is that this pair could be, and I'm not saying that it is right now, but it seems like it could be forming a possible falling wedge. Now, of course, according to all the TA rules, these patterns tend to break to the upside, but that's what I'm saying. So it's a little bit difficult here right now, because although, yes, we broke this upside support line, this medium-term upside support line taken from the low of the 23rd of June, but we're also still within the falling wedge pattern. So that's why it's unclear right now. I mean, it could reverse sharply to the upside, and that's why if you want to look at some higher levels, probably wait for a push above yesterday's high, at least above yesterday's high, which is roughly around that 78 territory, maybe just slightly above it. So a nice good push above that area could, in a way, could open the door towards higher levels, and in a way kind of would confirm this falling wedge idea. But if the whole situation with breaking the upside line is going to work out, and the bears are going to start jumping in here, then I would prefer to, like I said, I prefer to wait for a drop below this 76 territory first, and then kind of consider a further move towards the low of the 14th of September near the 74.58 zone, or even below that. But again, like I said, it's one of those pairs that do present themselves with nice opportunities. You just have to probably wait. It sometimes requires some time on that, but again, like I said, keep your eyes on those exotic ones as well. GBPCHF, now here, let me just adjust these arrows. This has shifted a little bit here. I've talked about this one previously. As you can see, some of the levels got violated, and now basically looking at this picture, first of all, let me just grab this low, the lowest point, the current lowest point of this week, although I doubt that we're going to overcome it. But this 1.1723 territory, that's the current lowest point of this week, and from here you can see that on Wednesday we had a nice sharp reversal, a strong move to the upside. It traveled above the 21-day EMA but failed to stay above the 100-day EMA. So at the moment, what we're seeing here, or what we could be seeing here, is a potential bullish flag here. If you look at this from the shorter term perspective, now if we jump into a 4-hour chart, this is a bit of a more clear picture. Yes, we are seeing this little correction here. By the way, out of curiosity, let's see how much is that is correcting right now. So now we have already corrected around 38.2%, so you can see that touch here this morning, during the early hours of this morning. Now we're seeing a bit of a reversal back up, and looking at this 4-hour chart, you can see that the rate is currently getting a hold up slightly above all of these EMAs. So in a way, like I said, this bullish flag could work out, but like I said, I would prefer to be on the safe side, and I would prefer to wait for a break above this 1.196, or actually let me just adjust this a little bit here. There we go. This 1.1911 territory. So a nice good pop above it would confirm a forthcoming higher high, and would confirm this idea kind of a potential bullish flag. In terms of the downside, of course, I know that waiting until it's going to drop below this 1.1723 territory could be a bit of a nightmare, I would say. But from the shorter term perspective, of course, we need to see a little bit. We need to be a little bit more on the safe side. And what you could do is keep your eyes on this 21-day EMA. If we do get that daily candle staying below it, then maybe this could increase the pair's chances of drifting further south. But yeah, at the moment, it's a bit of a difficult one here. And Probably I would prefer to see at least maybe a drop below this 1.1798-99 zone. We're in the way 1.18 territory before kind of, let's say, considering a bit of a decline here to the downside. So yeah, guys be very careful here and keep your eyes on this level, on this little inside swing high of the 20th of October. But at the moment, like I said, the scenario that I'm looking at is a potential bullish flag here. But a break of this 1.1911 zone is required. Now, euro against the Turkish lira, and look at this beautiful kind of trading here. Yesterday I've mentioned this one, guys, and I told you to be very careful. We had a nice pop yesterday above this 9.37 territory, which was previously the all-time high. Yesterday the pair created a new all-time high, and let me just probably grab one of these lines. Just I'm going to recycle them. I'm not going to use a new one. Not going to click for a new one, but we're going to recycle this one. So the high, yesterday's high was around 9.44 territory. So today the rate is currently balancing near this 9.37 zone, this previous all-time high. So let's see if it can push further north. If it can, then yes, we'll aim for this 9.44 territory again. But if it cannot, to be honest, as I mentioned before, I'm still going to remain neutral as long as it stays above this, or let's say if it stays between these two levels here, between the 9.37 on the upside and the 9.2151 on the downside. Now, a nice good drop below this territory right here in this 9.2150 could open the door towards lower levels. So here, for example, I can see there's a question in the chat room. So just bear with me one moment. Let me finish with this, and then and by the way, I need to wrap up my video. I mean, I got the German session is starting in a few minutes, guys. So just bear with me one moment. I'll quickly jump into euro dollar. I got carried away a little bit. Okay. I'll come back on the question from Mr. John Poole in my traders tea time, which is going to be 13:15 GMT, guys. But on the euro dollar here, guys, again, the same idea. I'm not changing it from yesterday. It's if it's back in this little territory right here, I'm neutral. I need to see this one kind of staying at least nicely above this 1.1831 zone, or dropping nicely below the 1.1696 territory. Sorry about the rushed euro dollar analysis, guys, but again, like I said, I just totally forgot that the German session starts just in a few seconds right now, so I'll have to apologize and I'll have to jump off here right now. So if you want to catch my video later on, my traders tea time, like I said, I'll come back John Poole, I'll come back to your question there, yep, we'll take it from there, guys. I'll pick up on some of these instruments again. So have a wonderful trading day, guys. Once again, sorry for the rushed video, but thank you very much for joining.